Wednesday afternoon market recap. I hope you are doing well no matter where you are located around the world. The one thing we share in common, if you're listening to this YouTube channel, is that of the US financial market indices and, of course, our top 12 individual trade list when it comes through to everything we do at Pivot Point Trading here. Now, this is the chart, the updated chart as at the close during today's session, that being Wednesday, of the S&P 500. You can see on my screen here, after the pop that we did establish, right, if I can zoom on in and show you this on Monday, this is Monday's candlestick here, we've essentially been doing, or the market has been doing, everything in its power to come on back down and to actually close this open window, the window between that of Friday last week and Monday of this week. On the S&P 500, it has achieved that as at Wednesday's session. You can see this long lower wick on today's candlestick. It has set up without a little bit of a doji candlestick, again, very similar to the candlestick that we had on Monday. But really one of two things is underway at this particular point. And in my opinion, the S&P 500 is the best chart of the three to really break this down and to show you, or at least to give you expectations of what to look for in the future. Now, the first option is that this retracement has more or less run its course. Okay, there may still be a little bit of market noise out there. However, what seems to be setting up for me right now, or at least as I interpret the technical picture, is that of a bull flag continuation pattern. What you want to look for during these patterns is to see price action pull back in a controlled manner. You also want to see, generally, if it coincides with the gap to actually see that of a bid underneath it at the bottom or the support of that open window. That is what we have seen as well. And again, you want to see this orderly pullback into that of the rising exponential moving averages. The problem now for the S&P 500 is that even considering that we have closed the gap, and yes, this does look like a bull flag continuation pattern, we're still quite a distance away from that rising 10 exponential moving average. So that alerts me that we may see a little bit more weakness, or we could at least see the S&P 500 continue to linger around this current trading area of roughly 3,070 points, give or take, for another couple of sessions. But if and when we come on back down and begin interacting with this rising 10 exponential moving average, I don't think there is going to be a whole lot of time until the market itself turns back on up and continues to break above what has been the establishment of the highs on both Monday and also during Tuesday's candlesticks of this week on the S&P 500. Now, everything is still technically bullish. We've broken above all-time highs most recently, or at least the multi-month resistance area that was framing up that ascending triangle, which broke towards the back end of October. We're clearly, evidently above the simple moving averages. I've recapped the exponential moving averages for you, the chart patterns, also the candlesticks. We are relatively overbought at this particular point. However, is that we can remain like this indefinitely. There's no reason why we have to see these oscillators go through a natural wave rotation back down into short-term oversold settings. It doesn't work that way during that of a bullish trend. It does, however, work that way during that of a sideways moving market. So again, you have to understand and distinguish between the two types of markets. We have very clearly left one. Okay, we have left that of the range-bound sideways channeling sort of consolidational market. And now we have moved into what appears to be that of a trending market. And because of that, these oscillators can just linger up and overbought, overextended sort of readings up here on the price panel plane of my oscillating indicators, indefinitely speaking. So I wouldn't go out and say that this is a major sort of red flag at this particular point, sort of flashing amber a little bit. And even if we do see a pullback, it will, or at least a deeper pullback, it will allow these oscillators to reset a little further. However, and the big however, is that it will still work in conjunction with the rising exponential moving averages. Understanding, of course, that trend traders at the moment are looking for a really good re-entry into the market if they've closed out, maybe potentially a bunch of shorts, or if they've actually entered into a bunch of longs. However, they haven't actually taken up their capital allocation for that long trade or the long side of that trade. So they are looking to get back in. And really what they're identifying at this particular point is which exponential moving average are they going to begin buying the market. So again, we've set the stage for, well, we've closed the window. It looks to be setting up a bull flag. It's just a matter of, are we going to intersect, okay, and interact with these rising exponential moving averages? The reason why we believe this is a trend is because the CCI confirms that it is a trend. It's above 100. We've broken above resistance, which is fantastic. And the ADX, although it is relatively high, we're now pushing up above 40. I think earlier in the week we were about 38 or 39. It's resting here at about 41 points at the moment. So again, these are still technically saying that, look, we're in a trend. But during the trend itself, you have to remain patient. And that was the title of Monday's video. I wouldn't be looking, or at least intra-session refreshing sort of my trading account or looking at the market really microscopically at this particular point. You have to become very content in the reasoning that this is a trending market. And over time, now that we've broken above these resistance areas, prices are going to continue to appreciate. So that's the mindset that you should have. All of the negativity, all of the pessimism that has been sort of swallowing or consuming the market over the past number of months, or even during, or really since the Q4 2018 period, whereby the markets moved into that pretty deep retracement back into the macro primary bullish trend line. Since then, although again you could say that there has been portions of market participants or pundits that have remained bearish on this market, the simple fact is that we're still printing fresh new all-time highs. And it was only as recently as Monday whereby all three of the markets had closed at a fresh new all-time high. Now we're going through that of the first sort of little bit of a minor correction, but we'll see whether or not it does move into a deeper correction. Now that moves me into portal number 2, option number 2. Are we going to see a deeper correction back down to, say, the 3,000 psychological round number and retest it, right? Old resistance as new foundation of support. They are the two sort of avenues that all of these markets, or at least the three closely followed markets, the S&P, the Dow, and the NASDAQ, a little bit different to the Russell 2000 and also the transportational average. The reason I say that is because those two markets still haven't actually created a new all-time high or a fresh new all-time high. So technically, according to Dow theory, we're not seeing intermarket sort of confirmation between at least the Dow and the transportational average, but it isn't a major warning signal at the moment. If we were to continue trending for a number of months and we were still yet to see the transport to the Russell 2000 confirm some of these higher highs that we're printing in these other markets, well then it would become a little bit of a concern. Let me just bring up the Russell 2000 and show you this because again, it's important that you understand this. You can see we're printing at 1,591. However, if I just go to a line chart, you can see that we're all the way, or at least the all-time high anyway, on the Russell 2000 is up here closer to 1,750. So we're still roughly 150 points below that. The exciting thing, however, is that we're very close to breaking out on the Russell 2000 above this resistance area that began establishing itself all the way back over in November, December of 2017. So again, once this pops and once the dynamic flips and once we see the Russell 2000 definitively break above 1,600, there's going to be an air pocket all the way up to about 1,700 points. There is going to be a little bit of arbitrage there. I spoke about that a number of weeks ago in that pro analysis class. And just to sort of reframe this in the transportational average, you can see a very similar type of scenario. We've got this definitive resistance area here whereby we generally sort of fail to break above it convincingly and we pull back down below it. However, there's a good chance that this is the run now that the industrial average is broken above its respective all-time high and we're moving into that trending state as well. So pay attention to those other two markets. Outside of that, you've got the Dow Jones again setting up not really that of a bull flag, but it looks more so like a stair-step consolidation pattern. Both patterns lead to higher prices. Okay, they're very similar. However, at the same time, this is more of a rectangular sort of horizontal pattern, but we still have this open window. So it wouldn't surprise me to see a candlestick with a long lower wick that sort of touches or moves into that of Friday's session last week before continuing off from those rising exponential moving averages. I hope you can see how this picture is coming together and how at the moment the markets themselves are taking a little bit of a breather after the mammoth run that they have been on since the beginning of October. It's been a month really now whereby we've just seen sort of trending prices for really the entirety of a month if you overlap the beginning of October through to the current juncture here where we're sort of overlapping into the beginning of November. All right, and as such, the market's naturally going to want to take a breather, and it makes a lot of sense based off some of these opening gaps that we established between Friday and also Monday's session. Pardon me, I believe that was the Dow Jones. It was because this is the NASDAQ. And sort of a pretty decent segue is that the candlestick that printed today in the NASDAQ, you can see how we have a little bit of a hangman candlestick. This is what I'm talking about in regard to the lower wick, all right? It comes back down. It tags intra-session into Friday's candlestick of last week, but we start to push off from it immediately. Although we were down 29 pointers at my sort of current streaming data at the moment, may change a little bit. So just check your own data. But if you see this natural sort of phenom sort of play out, it's a very bullish signal. It's a continuation signal. It's meaning that the trend participation or people looking to enter into this trend are pricing off strategic locations. It doesn't mean that this is going to be the absolute low during that of a correction or a little slight minor correction, but it does tell you that there are people, right, who are just jumping and itching to get back into the market to participate in that of the continuation of prices moving to higher levels. All right. So I think you should feel, hopefully at this point, comfortable, or more probably, hopefully anyway, more comfortable than what you were back in the period of August, even though again, we were speaking about this market setting up a series of high lows and continuing its bullish trend, and even through to very close to the apex of the symmetrical triangle on the NASDAQ. It broke a little bit sooner than what originally I thought it would. I thought it would more so break in the period of November, but that's worked in our favor because again, we have been simply accumulating primarily anyway speaking, SPY positions, but there are a lot of people who've been accumulating Qs as well, and I understand that, and I actually completely agree with you wholeheartedly. Take your pick, all of these markets are going to continue to rise, and as such, the fundamentals, although they are deteriorating, although they are slowing, there is still adequate gas in the tank for this market to continue to move to the upside for quite some time into the future. Now, a very quick recap. In our top 12 individual traders, you can see Apple's more or less treading water around 256.91. Nothing blockbuster there. Amazon is still above that 17.89 bullish entry. You can see Boeing Airlines, although personally I do not have this position open, it's back above 342 and 351. We're trading at 358.29. It was probably the least favorite in that pro analysis class over the past 2 weeks. I've been waiting for more structure to build, and as such, I thought potentially we could set up a little bit of a false break to the downside and create a higher low. That wasn't the case. Both of these, by the way, entries are on, are on the bullish side. We're not trading bearish anything, given that the market is trending. But again, it's had a pretty decent 3-day pop for the week so far. I mean, we've moved from about 340 up to almost 360. So there are people who have emailed in and said that they jumped on board with it. I just wanted to say congratulations. However, for me, it wasn't up there on one of my favorite trades for the week upcoming. So simply, I just sat on the sidelines, and I'm pretty happy about that. But you know where those targets, are. You've got Baidu again, getting a little bit of a pop moving into earnings. Again, we'll recap that in this current week's pro analysis class upcoming. You've got Caterpillar just continuing on from 140 and 145. It's up here at 146.37. Target on this trade is still looking good. If I can bring it down into perspective for you, it's sitting just shy of $155 per share. You can see COP. And by the way, what we were speaking about over the weekend was this trend line holding. It was going to be what we called a mark of truth of the market, based off where the market was sitting and also a bunch of these individual trades. So when you see these trades or these next few trades turning up off from this support area, it's a major clue as to the direction of the market indices moving forward. This is something that we highlighted. It was something that we spoke about in great detail. And as you can see again over the upcoming few shares remaining, they are starting to pop to the upside. That's COP moving to the upside. Disney is not one of those, however, it is still holding its support area. It seems to be printing at the moment a little bit of an evening star reversal, even though this doesn't really fit the picture, the actual middle star. You can see it is somewhat of a 3-day pattern. However, I'm still holding out on that particular trade. Google, you can see popping. Started the week down here just above 1,250. We're just shy of 1,300 at the moment. We're getting very close to a breakout above 1,300. IBM is another stock which fits that category, bouncing off from its rising bullish trend line. Very important to note. We started the week down here below 134. We're up here very close to 138 at the moment. We've definitively, or what appears to be, we've broken above 136.35 at the moment. We've got Microsoft as well, just lingering in. This looks like a sort of an extended sort of stair-step pattern. However, we still have this open window. So we're sort of stuck in the mud at the moment, whether or not we break out above 146 to continue the trend, or whether first of all we come back down to 141 and then continue the trend. It's rather immaterial at this particular point, but we are starting to see a series of dark candlesticks. But at the same time, and you have to think about this in comparison or in conjunction with the overall market indices, is that you're still seeing the rising exponential moving averages, which should act as that trampoline foundation for the next push if in fact we do pull on back down into them. So again, the markets and a bunch of individual trades, they're treading water, so to speak, after the Monday pop. And this is all very constructive upcoming as well. The final stock is Netflix here. It's still sort of lingering around just between 281 and 295, which are the two bullish entries that we've had on this stock. We're certainly still above that of the rising trend level. So I'm just allowing as much time as it needs until I believe Netflix is really going to get moving and popping up to 361.26. I'm still holding on to this, just lingering, and happy to hold on to it. Pretty content about that as well. So that's going to do us. Pardon me as I lose my voice. As at this Wednesday afternoon market recap, please jump on into that pro analysis class, right? Each Saturday you can sign up. Essentially right now you can go back and go through the catalog of past videos that we have. It's all future or forward-looking analysis. Whereas most of this analysis that I perform publicly here for you is more so recapping and it's retrospective. However, of course, we do intertwine a little bit of market analysis, forward-looking market analysis, but not as much or not to the extent and not to the detail as what we do each and every week in that pro analysis class. So that's going to do us. So I hope you appreciate this analysis. It's always a pleasure and a privilege to bring this to you. And I'll continue to do so into the future. All right. Enjoy your evening, everyone around the world. It's James signing off on behalf of Pivot Point Trading. Farewell.